Hello, this is Silvia Pavoni, economics editor of the bank, reporting from the annual meeting of the IMF World Bank. And I'm talking to the central bank governor of Trinidad and Tobago, Jwala Rambarran. Mr. Rambarran, the banking sector in Trinidad and Tobago is the largest by far within the Caribbean region. In fact, it represents, I believe, something like 50% both in terms of assets and profitability. And I know that the central bank has started initiatives to make sure that the stability and strength of this sector is guaranteed. Can you give me some details about the recent initiatives?
Yeah, sure. The recent initiatives are around how we strengthen financial stability and the entire decision-making framework for the central bank. We've had a financial stability committee existing in the bank for some time now. And what we decided is, given that this is becoming an extremely important part of central bank's mandate, that we take a second look at how we could ensure that we could build confidence and engender confidence as we move forward. So we've actually streamlined the Financial Stability Committee to one that it is now a high-level committee where the governor chairs, and it comprises the deputy governor and deputy inspectors and the chief economist of the central bank. And the reason why we've done that is that this committee will now be the one that interfaces with other regulatory authorities such as our Securities and Exchange Commission, our Financial Intelligence Unit, and with other regulatory authorities inside the region and even outside, such as with the US SEC and what have you.
So integration with other authorities on the regulatory front, obviously, is key. What is the contribution of the banking sector to the local economy now?
First, let me indicate that the banking sector remains one that is strong, very well capitalized, and one that, based on our stress testing, is able to withstand some significant shocks. The financial services sector in general, which includes banks and a number of what we call non-bank entities, is now the fastest growing segment in the non-energy sector of the country. It accounts for close to, at least on its own, about 10% of GDP, and a significant chunk of that is about maybe 12 to 15% in terms of employment generation in the non-energy sector. So it is a very robust and vibrant sector within the economy.
And I know that in the past there were concerns about the level of financial literacy of the population, which is something that obviously, as we know, can lead to problems. There is a second survey, I believe, that is which results are going to come out later on this month, following on the first survey that depicted a picture that wasn't too rosy, perhaps. Do you think that the second survey results are going to be more promising? I know that some initiatives have been undertaken to make sure that financial literacy is improved.
It's difficult right now to say what the results of that second survey would look like. What we do know is that when the first survey was done, that was around 2007. And since then, we've come through what we call the tail end of our third energy boom, which has been followed by a period of negative growth and then stabilization. And we also experienced a serious domestic financial crisis. And of course, the global financial crisis ensued. So it is quite possible that during the ensuing period, the level of financial literacy may have actually fallen, but that would only be confirmed when the results are in. And perhaps the mitigating factor would be the role that our National Financial Literacy Program has played in trying to at least show up the level of financial literacy and financial education throughout the country.
Do you think that this is something that other countries in the Caribbean region will want to replicate, and should they?
Well, definitely. There's a very strong link from financial literacy straight up to financial stability. And we've seen in the Caribbean region the need to strengthen our financial stability frameworks. We've seen the need arising out of the CLICO crisis, the Stanford crisis, that we've got to ensure that these crises like these don't reoccur.
These were companies that the state had to intervene in?
Yes, these were companies that the state had to intervene in. what is more important is the painful experiences of the depositors, of the policyholders in these companies, where they saw essentially their life savings disappearing.
So let's hope that something has been learned from the past. Thank you very much for your comments.
All right, you're welcome.